Hey everybody, and welcome to Accounting with Confidence. My name is Beth Whitworth, and I am your host today for this episode. This week we are going to be talking about the chart of accounts. And some of you may be very familiar with it. You've been in the industry for a while, or you have been working with your bookkeeping files and you understand everything about the chart of accounts. But I have found that I run into several people who are just not sure what the purpose of the chart of accounts is and how to do anything with it and what it really means. So I'm going to talk a little bit about that today. And we're going to look inside a QuickBooks file just for some of the differences between what the actual kind of the technical knowledge is versus how the software handles some of these things. So to begin with, the chart of accounts is what I would consider the backbone of your accounting system. This is what holds everything together, and it is the very first thing when you are setting up any type of accounting file that you will define. So really what this is a list of accounts that are categories for you to post any of the transactions that happen in your accounting file to. So those are things that, you use your credit card to go have a meal somewhere. You need to record that the credit card balance went up and the meals expense also went up. So what happens is you need a list, and you need a list of you need a meals and you need a credit card account. Those are parts of your chart of accounts. So really, every accounting system that I'm aware of, really internationally even, involves having a chart of accounts. And there are 5 basic account types that you have to understand what they're for and how to use. And then there are some sub-account types that are handled differently depending on what type of software you're using. So the 5 main account types there's 3 that are related to the balance sheet, which is a financial statement that shows where you are at any point in time with things that you own, things that you owe, and the overall activity of the company since the beginning of time. And then there are 2 types of chart of accounts that belong on the profit and loss, or the income statement. And that's the statement that shows you your activity for a period of time. So the 5 main categories, the 3 that belong on the balance sheet are assets, which are what you own. And then there are liabilities, which are what you owe. And then there's equity, which is really assets minus liability equals equity. And that's how I typically describe that is if you were to cash in all your assets, maybe you collected all of your receivables from your clients and you sold all of your machinery and your equipment and you sold all your inventory and you paid off all of the debt, you paid off all your vendors, you paid off your credit cards, you paid off any loans. What would be left is your equity in the company. And really that's a representation of anything over time. It is the representation of the investment you have made into this company. So on the other side, on the income statement side, there are 2 categories, and that is your income accounts and your expense accounts. And like I said, there are some sub accounts of these categories, and we'll look at those. So now I'm going to hop over to a QuickBooks file and give you a little bit more detail on how these things kind of work together. So I'm looking at just the QuickBooks Desktop file first, and we may not jump into the online file because it's the same categories. It's just laid out a little differently between the 2 softwares. So when you are looking to go and add any type of an account to the chart of accounts in QuickBooks, you are going to have some choices. And it gets very confusing if you're not sure what you're trying to add. So they give you some main categories. Here's the income and the expense, like I just mentioned. And then there's equity, which that actually is something I mentioned. But the other accounts are not specifically listed here. You don't have one that is just general asset, and you don't have one that's just a general liability. You need to understand that there are other types of accounts that are actually a sub-account of an asset. So there are things like fixed assets. Those are like equipment that you purchased, a vehicle, any type of property. So if you own a building or you own a piece of land, those could be considered fixed assets. And that would go in your asset section. Then there's a bank account. Again, it's something you own, therefore it is an asset. There's a loan. That is something you owe, so that's a liability. And a credit card, and in QuickBooks definition of a credit card is a credit card that you're carrying any type of balance on, or that you're using for your business, and that's a type of liability. It's something you owe to a third party. You owe it to the credit card company. So it addresses the income and it addresses the expense. It has a couple of types here of assets, a couple of types of liabilities, and the equity. And they've listed these here as these categories for the most common types. However, there are other account types that QuickBooks handles, and here are the other types. There are accounts receivable. This is an asset. And this is essentially represents the balances that your customers owe you. You may have heard it back in the day. It might have been called trade accounts receivable or trade receivable. But really the common terminology now is accounts receivable. It's an asset. It is something you own. You own that balance and it becomes cash when the customer pays you. Other current asset is used for some miscellaneous types of accounts that you might need to set up in your chart of accounts. If you loaned money to an employee, you'd have an employee advance here. If you needed to set up an account for inventory, inventory is an other current asset in QuickBooks world, and that's, again, it's an asset and it is something you own. When you purchase inventory, you own it until you sell it to a customer. You also have other assets. These are considered long-term, and in the world of accounting, a current asset or liability is something that you expect to pay down within 1 year, and any type of other liability, long-term liability, and other asset is something long-term. And this is where we would stick something like land or amortizable assets. Like if you purchased a business and you have a goodwill, that's where we put other assets. Accounts payable, here we are still on the balance sheet. Accounts payable is what you owe to your vendors. So anybody that you pay money to would be a vendor, and unless it's an employee. And accounts payable is where we would house all of that in the QuickBooks world. And other current liability would be things like sales tax payable. It's something that you've collected from your customers and you're going to pay it out at a later date to the state or city agency that you owe it to. Could be payroll tax liabilities. That's an other current liability. Again, those things are what you would expect to owe within a year, which makes it current and not long-term. A long-term liability is a loan. So any type of loan that you expect to be paying in more than a year. This next three are relating to the profit and loss statement. So we're back over to the categories that apply to categorizing the transactions that are happening in this year's activities. So we have the general income accounts, and then we have the general expense accounts. But in the middle of those two is if you are in some sort of manufacturing or retail space, you are looking at having a cost of goods sold account. And that essentially represents, it's an expense account, but it is something that represents things that you are purchasing and reselling for the most part. And so when you're looking at a profit and loss statement, you'll have income minus any cost of goods sold, if that applies to your company. Not all companies need to have this category. And then it would subtract off also other expenses to come down to what the activity has been for the year. The last two categories in QuickBooks are other income and other expense. And these I like to use for things that we consider non-operating, where they might be items that really aren't part of the operations of the business. It's not something that you had to, income that came in or expense that you had to pay for operations. It could be things like interest income on a savings account. It could be capital gains for when you maybe sold an asset. On the other expense side, it could be your depreciation expenses. Those are not cash related, and so that is something that you might have as an other expense category. And what it does is it allows you to have your profit and loss just have a subtotal for all the things that are actually operationally related. So you have your income from sales, you have your expenses relating to bringing those products in, as far that's cost of goods, and then maybe you have your overhead expenses. You might have rent, you might have utilities, you would have advertising. All of those would be general type expenses, and that would total down to a nice net income before other things that might be one-time things, that might be extraordinary. Maybe you had got a grant this one time that's not part of your regular income, especially this year when we're looking at a lot of federal and state funding to help during this economic downturn. So those are your general types of chart of accounts, and what you will see is you will have a list in your chart of accounts that typically you like to sort by the type. And what that does is it puts it in the order of how you will see it on your reports. So you will have anything related to the balance sheet that typically ends with 1, 2s, and 3s is how you would number those. And I do recommend that you use account numbers. It makes things easier to classify. Then you would have 4s that are typically income accounts. You would have 5s that are typically cost of goods sold accounts. And then 6, 7s, and 8s typically are your regular expense accounts. And then other things might be 8s and 9s or 9s. So that's how they typically number. And that's something that has been around for many, many years as far as the typical ways that you would number things and order things. And as you can see, these are very general words that are being used in here. So my biggest recommendation for people when they're setting up their chart of accounts is never use a customer name, a vendor name, or an employee name in any type of account. You do not need to have an income account for Acme, your customer named Acme. You're not going to have income for each specific account. So that is very important. It keeps you from having to set up a whole bunch of accounts when you don't really need them. So you're going to use these for general buckets of information and not to be super specific, because in QuickBooks there are lots of other ways to get very specific. Okay, hope this helps. I hope this makes sense and gives you a little more clarity on what the chart of accounts is and what it is doing. See you next time.